Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to Pasture to Pin, a new series from the EverAg Insights team. Each week we bring you news and updates on the cattle markets with the intention of helping cattle producers manage their risk. I am your host, Michael Todd Rowen, coming to you live from my home office in the Texas Panhandle. Before we get rolling, let me timestamp this episode. Today is Tuesday, July 18th, 2023 at 3:34 in the afternoon. Once again, I am joined by my co-host and teammate, Mr. Trey Freeman. On this episode, Trey and I will be welcoming the captain of the ship and our very own director of livestock, Mr. Stephen Hardison. Trey, Stephen, gentlemen, welcome to the show.
Hey, good to be here again, MT.
Yep, thanks for having me.
Absolutely happy to have you both. Looking at pasture conditions and weather, half of cattle country seems to be in decent to stable shape week over week. The other half is struggling for a decent part. Nebraska and Kansas still have persistent drought, with Iowa and Missouri looking at below average rainfalls thus far in the year. We've had scattered rains across the plains into parts of the Corn Belt over the weekend. Looking ahead at the 7-day forecast, it actually looks promising for most of the southern plains and most of the southern Corn Belt. Switching to the cash market, last week, live cash cattle ranged 175 to 184 live in the south, with prices ranging from 184 to 186 live and 292 to 295 dressed in the north. This week, the only reportable trade thus far is 186 live delivered in Iowa. The choice side of the cutout, once over 340 in mid-June, lost 1096 last week, settling at 305.94. As of last week, cutout prices declined 8 days in a row before seeing a small jump just yesterday. Trey, can you give us a rundown of the futures market, please?
The cattle complex had a strong week last week, carrying the momentum into this week with another new contract high on Monday in fats, and in feeders a new contract high close. Today, both fats and feeders finished with an inside day. Since the beginning of the month, feeders have traded relatively sideways as a tough corn market has kept a lid on feeders. And how about this? Front month August fats are trading par to cash in the south, and in some instances to a premium. So although we're still trading to a discount to cash in the north, futures are finally playing catch up as cattle feeders continue to hold strong, forcing packers to pay up late week in and week out. The big thing that stands out to me over the last 3 weeks is the bull spreading in both fats and feeders as front months continue to build a premium to deferreds. This is indicative of a very strong market, and especially strong in fats in the face of weakening cutout prices over the last couple of weeks. Now, turning to outside markets, the U.S. dollar is 4 cents from the high posted just 2 weeks ago of 103 and is currently trading sub $1 for the first time since April of 2022. In addition, Dow futures printed their highest price today since December of last year. Overall, the strength in equities and the weakening of the U.S. dollar will be supportive to commodities across the board. This includes cattle, so what better time than contract highs for outside markets to begin to really show their support?
Thank you very much, Trey. Back to our guest. Stephen, could you take us through some of the technical analysis for the cattle complex, please?
Certainly, MT. Thank you so much for having me on the show. So I like to take a different approach when I'm looking at the tail of the tape, specifically when we're looking at the cattle complex. I like to dive into a little bit deeper long-term chart series. What I have presented today is feeder cattle on a 12-month bar. So this goes back to 1976, and this is a 1-year bar. Each bar represents 1 year, and you can see the trend is just clearly up. I've actually overlaid a regression channel, and the correlation coefficient as the price relates to the time series is 84%. So a very strong correlation coefficient. Basically what that means is that price is tracking along the x-axis with time to a strong degree. And we can see here as we get into the tail end of January of 2010 into even 2011, 2012, when we had the big drought, we get into 13 and even into 14, we get that strong run-up. Well, this strong run-up was certainly due to the drought, where cattle producers were liquidating their herd. And you remember in 2012, we come in with not a record low number of inventory, but it was a low number of beef inventory on hand in that January report. And that led to this run-up in 2014. what we're seeing is the same kind of setup, right? We had the super big drought in 2022, and we're getting that big run up after we got the low inventory report this January. So I want to do something here a little bit different. I'm going to actually overlay another piece to this so that we kind of capture exactly where we think price may go. So I've actually taken and overlaid just a parallel channel to capture what the high was in 2014. And so we got up here in 2014 to 245.20. And so if we think that we're going to do the same thing in 2014 on feeder cattle, then that would put us right here about 270. All right. Now I've done this for live cattle as well. So I'm going to go over here to live cattle. We're going to see a very similar type pattern. The correlation coefficient is actually a little bit stronger at 87.6%. Overlaying that same parallel channel, looking at what it did in 14, that gets us right about 190. So we're at 181.27 today, but that gets us to 190.20 as a potential target for live cattle. Looking at it another way, again, this is kind of the monthly chart on the continuous front month feeder cattle. I'm going to actually turn on another piece here, and this is what we call an Andrews pitchfork. And I'm just going back from the 1976 low to the next swing high to the next swing low. And what we're seeing is prices trending along that median line, right? And we see again here in 2014, we get that big strong run up. Again, I'm gonna plot this out. Very similar to the regression channel. It's going to look very similar, but I just want to showcase exactly, again, where we may end up. So this was in November 2014. We hit the high. That's October at 245.20. So if we did that again somewhere along here, October, you're talking about right in there, 273. So 270, 273 on feeder cattle the front month. Live cattle, very similar thing as well. If I was to plot this out October 2023, you're talking again 190 to 191. So, just looking at a simplistic way to analyze the tail of the tape using pitchforks and regression analysis, those are kind of where we think that the tops could be in the cattle complex.
Excellent stuff. Thank you very much, Stephen. Now, I know none of us have a crystal ball. We know where we've been. We know where we're at. Stephen has given us a technical analysis on where we think we could go. But Stephen, Trey, I pose the question to you. What are some things, bullish and bearish, that could have an effect on this market?
Bearish, I'd say, besides the eventual obvious herd rebuilding phase, on the bearish side, cattle feeders could begin feeding out to extravagant weights, or maybe consumers' unwillingness or inability to pay for these high beef prices. On the supportive, on the bullish side, I'd say, look at outside markets. Not only have they just the last really month held together, but they're very supportive. Like the U.S. dollar continues to trend lower. That'll be supportive to exports and equities. Equities not only holding it together, but they're running higher. So outside markets, keep an eye on them. They're finally showing real support.
Very good. Thank you, Trey. Stephen, bullish, bearish, what are some things we need to be keeping an eye on?
Yeah, thanks, MT. Yeah, certainly just looking again back to the charts, I think, keep your eyes on the fact that we're getting a little bit long in the tooth, looking at some of these indicators on the charts. I like to pull up a few that I have in mind, which is the Williams percent R on a 30-day period. And we can see that we get into 2014 on feeder cattle, and we get in overbought territory, and we stay overbought for an extended period of time. Keep your eyes on that. When that begins to roll over and move downward, that's always a good indication that we could be beginning to phase into a pullback or some sort of reversal. Again, we are overbought. We're looking at it a little bit, nearer term, and I'm going to put this on a different scale. But again, we are overbought on some of these indicators, and you're even starting to see some divergence in the 2-day RSI versus price series. So we get higher highs in the closing price and lower highs in the oscillator. So that's generally speaking a bearish tilt. And we'll see that in the live cattle complex as well. bullish case, obviously, you've seen where I was pointing to, 190 on live cattle, 270 on feeder cattle. So just analogous type year setups comparing to 2014, getting us to that high. You have a stock market that continues to rally. So I believe people start to continue to feel wealthy, right? They're seeing their retirement accounts with money in them. And so they can afford that expensive beef right now. We have, like Trey said, the dollar that's falling down a little bit. I think the key here is to keep our eyes on corn, right? What's corn going to do? Where's that number going to come in at? And if there's any yield on trend, we would say that corn's likely going to continue to go down, which bodes well for cattle. But if for some reason trend line yield comes way down and we don't quite get the ending stocks, then certainly that could make corn get very, very expensive, which may put a nosebleed into the cattle complex.
Very good. Thank you both. And if I may add, bearish for me are interest rates, not necessarily where they're going, but where they are at, combined with the current price of feeder cattle, making it very, very expensive for feed yards to replace that inventory. When you tack on the interest rates to the existing price of feeder cattle, it just gets pricey, and that puts a lot of weight on the producer. Bullish, still an elevated cutout combined with what seems to be a fairly resilient consumer. I like the way consumers are spending. I like really where the beef cutout seems to be bottoming out. And as y'all have said, we've got outside markets that are supportive of our market. So again, thank you both very much. That is a wrap for this episode of Pasture to Pen. Thank you to all of our viewers for watching this episode. If you haven't done it yet, hit the like button, hit the subscribe button, and click the bell to be notified of future episodes. Thank you once again to my co-host and teammate, Trey. Thank you again to Stephen for not only guiding this team, but joining us on this episode. As always, thank you to Paige, who continues to help us look our best. A big thank you to Corey and to Hattie and to the entire EverAg Insights team for making this show a reality. Until next time, stay safe, pray for rain. At EverAg, we partner with every corner of the agriculture industry, from livestock to dairy, crops, and agribusiness, to deliver intelligent supply chain and risk management solutions. We are EverAg, everything agriculture. Learn more at www.ever.ag/everything.